we go straight into this, I want to get everybody in the right mindset for how to think about this. Think of this document as a personal tax return. And a lot of times when you look at your personal tax return, that front page really is just all the aggregate information, and then there's a bunch of schedules that go in behind it if necessary. This is a very similar type document. You're going to actually work through it from the back to the front, and to go over the sections of this application, there are 4 major sections which can be found right here. And so there's the PPP loan forgiveness calculation form. There's the PPP Schedule A, the PPP Schedule A worksheet, and then there's also an optional PPP borrower demographic information form. This number 4, the reason it's optional, it was a couple weeks ago, the OIG came out with some guidance or some suggestions for the SBA, and one of them was we want you to attempt to try and track the demographic information of the people who have been getting the loan. And so this wasn't something that's mandated on people, but I will go over it real quick just so you know how it works. And then you're going to go work through the Schedule A worksheet. Then you're going to be able to fill out the Schedule A, and then you'll be able to do the loan forgiveness calculation form. And so what that means is we're going to go straight to the end. Oh, and when you're submitting for forgiveness, the only thing that your lender is going to get is going to get this, the first section and the PPP Schedule A. So the worksheet is really just to help you fill everything out. There are instructions and definitions on this front page, but you guys can read through those on your own. Let me go to the very end. And so here is the optional form. And so just let's go through this real quick. So all this is principal name. This would be, if it was me, it would be my name, what my position is in the company, owner, CEO, whatever that is. And then for me, I am a non-veteran. I am male. I am white, and I am not Hispanic or Latino. And so once again, that is not required, but it does help the SBA to make sure they can kind of figure out where the funds are going. And so we are going to start. This is the PPP Schedule A worksheet. And so there are 2 different tables. One is for this first table is for anybody who made under $100,000 annualized that an employee was used to get the original PPP funding, or what was calculated in that. And table 2 is for anybody who is over $100,000. And the one thing you'll notice is there is not a salary hourly wage reduction box for anybody over $100,000. And that's because the legislation did not state that you could not reduce people's wages if they made over $100,000. And so that is not in there. And so let's just start filling this out. The first section, which is employee's name and employee identifier, all of the instructions for this table are in the previous pages. It's 2 pages before. And so employee's name, employee identifier, and really all it is what's the name of the employee and what are the last 4 digits of that employee's social security number. And so in here, the example that I'm using for today, I created a mock one where it was a person who had, they got paid through the company. So it was an owner that got paid $65,000. And then they had 2 employees that were salaried employees, one making $40,000 a year and another one making $60,000 a year. And so that was a total of $165,000 in eligible payroll expenses. And so let's just do the first employee. That first employee, you put their name in here, their last 4 of their social security number, because that's the employee identifier. And now you're going to enter in the cash compensation during that covered period. And so in my example that I'm going to use, I'm going to say that nobody adjusted anybody's salary during that time period. And so during that time period, they would have been paid over that 8-week period, $6,153.85. The next thing that you're going to calculate is I'm going to skip the average FTE, and that's because the cash compensation kind of goes hand in hand with the salary and hourly wage reduction. And so this is only if it's necessary. They have a three-step determination whether or not there's any reduction in your forgiveness amount based upon you lowering somebody's salary or hourly wage by more than 25%. And so in this case, since we didn't change anything, the average annual salary for this employee is $40,000. And the average annual salary between the previous time period was $40,000. And so what they're checking here is how much did you reduce it by? If you were to lower this, you'd get it's going to be this number divided by this number. And in this case, that number just comes out to 1, which means you paid them 100% of what their previous wage was. And so if this number winds up being above 0.75, they're going to say that you never reduced their salary by more than 25%. And so in this case, you enter 0 in this column, which is the salary hourly wage reduction. And what that means is that you did everything you were supposed to do. And so we're going to reduce we're going to take away your forgiveness amount by $0, meaning that your forgiveness remains intact. So I think the best way to explain this section for everyone is they basically gave everybody a 25% exemption in reducing people's wages. And so if you reduced anybody's wages by more than 25%, whatever you reduced in excess of that 25% exemption will then start going against your PPP loan forgiveness amount. So for example, a quick example, if you're paying people $1,000 a week and you reduce their salary to $700 a week, the first $250 of that is exempt, but the additional $50 that you reduced it by, you multiply that by 8, and that number would come out to $400 here, meaning that you'd lose $400 on your forgiveness. There is one other section that you should still go through because there is a safe harbor provision, basically stating that if you're able to rebuild their salary up, you might be able to get more forgiveness. And so with that being said, if you do not meet this first step criteria, that is when you start going through step 2, step 3, etc. I'm not going to get into this in detail because there's way too many possibilities that it could be, but remember that if you do think that you reduce them by more than 25%, then that's when you start having to calculate the rest of everything. All right, the next one is going to be the average FTE. And so in this time period, we did pay them the full amount and they got paid for the total hours they were getting paid for before. And so this average FTE would just be 1. If for whatever reason we had scaled back operations and they had only worked 30 of the 40 or only been paid for 30 of the 40 hours, then this, if you remember, there were 2 different tests that we could use for this. One would be the 30 hours divided by 40, then this would be 0.75. And the other one was anybody working 40 or more hours per week is 1, and anybody working less than that would be 0.5. And so you would get to choose whichever one was more favorable for you. But in this case, it's just 1. The second employee, do the same thing. So this is the employee's name, the last 4 of the social security number, and then this person got paid on average $60,000 a year. And so during that 8-week period, they would be paid $9,230.77. You could go back up and go through this calculation again. 60,000 and 60,000 still comes out to 1. And so this means that we put 0 in the wage reduction again. And then they worked the entire time. You do have to do the salary and hourly wage reduction per employee. If you did not reduce anybody's by more than 25%, this calculation goes much faster. If you did reduce it by more than 25%, you're going to have to take some time and go through each one individually. One of the biggest questions that I get is what happens if one of these people during the pandemic said, I'm scared and I don't want to come back to work. So what would happen there is this would be a 0 FTE as long as they were not paid during that time period. But there is a FTE reduction exemption. And I just want to show you kind of how that works, because I think that these things might be applicable to a lot of companies. So it says, indicate the FTE of 1, any position for which the borrower made a good faith written offer to rehire an employee during the covered period or the alternative covered payroll period, which was rejected by the employee, and any employees who during the covered or alternative payroll covered period were fired for cause, voluntarily resigned, voluntarily requested and received a reduction of their hours. In all of these cases, include these FTEs on this line only if the position was not filled by a new employee. And any of those don't go against your forgiveness. And so what this does then is, if you were not able to refill this position, but you have documentation from them stating that I don't want to come to work because I just don't want to be there, that does not go against you. And the way they do this is this FTE reduction exemption right here, you're able to put a 1 here. And so no matter what happens, these are going to get added up. And so this box would be 2, meaning that you had 2 employees, and that's because you had the 1 up here and then the exemption because the other person just decided not to be there anymore. So that's how that would work. But in this case, they did stay. So we're just going to keep those all at 1. This box still remains 2. And then you're going to add up the totals for these columns. And so this box winds up being 15,384. I cut off some cents. And then this box is going to be 0. And that means that we do not lose any of our forgiveness provision because we didn't reduce anybody's hours. So this is the PPP Schedule A worksheet. Depending on how large your company is, you obviously have to do more or less work. And then it also depends on how you're doing. If you're an hourly wage, pay wages hourly, pay them salary, these might look a little bit differently. I don't have an example. This example does not include anybody who got paid over $100,000 historically, but this is where you would put any employees in that made over $100,000. So now what do we do with this information? So this is the worksheet from the Schedule A. We're going to go now to the Schedule A, which, like I said, we're working backwards. And so here's Schedule A. And so what they're doing here is they're putting together some of the information that was put together in the worksheet. And so what they're asking for is, what was the cash compensation from the box that you, and box 1 was the total amount of payroll that you had for the employees. And so if we remember, this was 15,384 and actually 61 cents. I didn't round it here. And then now you're going to enter in the average FTE from box 2. Remember, we had 2 employees and they worked the entire time. And then we're going to enter the salary or wage reduction in box 3. This was the amount that they were taking away from us for reducing people's salary by more than 25%. In this case, we did not do that, so it's a 0. Line 4 is we're going to enter in the cost, or this is for, remember the table 2 is for anybody who made over $100,000. And so enter in the cash compensation from box 4. We didn't have any of those employees, so this was a 0. Enter in the average FTE from that category. We didn't have anybody, so that was 0. And now we are going to go into the total amount or the non-cash compensation payroll costs. And for purposes of this, I just made up some numbers so everybody kind of sees how it works. And so for health insurance contributions, I put in $1,407.69. For retirement contributions, I put in $2,000. For state and local taxes assessed on the employees, I just put in $1,207.70. And so one thing that we have not entered in yet that I did speak about was that there were actually 3 people getting paid through this. There were 2 employees and an owner. This is where the compensation to owners comes in. And so This was also based upon previous year's compensation. And I said at the beginning that they were getting $65,000 a year. And so that 8-week period in this case would have came out to $10,000. And so now we add up all the total payroll costs. It's 1, 4, 6, 7, 8, 9. So 1, 4, 6, 7, 8, and 9. And that comes out to exactly $30,000. And I did that so the rest of the math would be easy. So now we're going to look through, we're going to go through the full-time equivalency reduction calculation. So the other rule was that you couldn't reduce your total amount of employees during this time period. And so basically what this box says is that if you didn't reduce anybody, click this box, skip these two, line 11 and 12, and then put 1 in line 13. And basically, let me just show you what they're calculating. They're just trying to save you a couple steps. The average FTE during the time period that we chose, that we did historically, was 2. And then the total average FTE that we had during the covered period was 2. And so you're just dividing these, and it comes out to 1. And so if you didn't reduce anything, there's saving you those 2 spots. But if your previous time period, you had 3 employees, and now you have 2, this would come out to 0.66. That's what they're doing there. And that would mean that you'd get you'd be reduced by about 33% of your forgiveness provision. But for this purpose, it was 1, which means 100%. And so now we have the Schedule A filled out. And you're going to work backwards a little bit more. And we're going up to the actual forgiveness page. I will go over the authorizations here last, but we're going to pass that up. Okay, and so now this is where the actual application happens. And so you've got your legal business name, address. I'm not going to go over DBAs and tax ID numbers. You'll have your PPP loan number from the SBA and from the lender. And what you're going to do is type in your PPP loan amount. And so if you remember that I said that the total compensation in all of this was $165,000, that would have come out to a loan amount of $34,375. And employees at the time of application were 2. Employees at the time of forgiveness were 2. In this case, we're going to assume that there was no idle loan advance, but in the documents above, in this section above, I just want to point it out while I'm here. It was line 11, yeah. If applicable, the SBA will deduct the idle advance amount from the forgiveness amount to the lender. So what that means is if you did get not an idle loan, but an advance, that does get subtracted from your forgiveness amount. That amount is not calculated on this form, so just be prepared for that. All right. And so in this payroll schedule, we said that it was biweekly. The covered period, they had the loans put in their account on April 15th, 2020. And so they have 8 weeks from that time period to do everything. And so that means their covered period ends June 10th, 2020. And they did not opt for this. So the alternative covered period. So we're going to say not applicable. This is not over $2 million, so they will not check here. The reason why this box is here is anybody who received over $2 million, they will look at the application and will audit the section, which is the necessity of the loan. They determine that anybody who was eligible for more than $2 million may have had other resources available to them, and they're going to check that. All right. So now we're going to line 1, which is payroll costs. This is just from the next schedule, line 10. And if you remember, our payroll cost that we came up to was that nice, even $30,000 amount. In this example, I am saying that they do not own their own building and do not have mortgage interest expense. They do rent a place, and they pay $6,000, or over that 8-week period, they paid $6,000 in rent. The utility payments was $1,500. And now we're going to the adjustments for the FTE and hourly wage reductions. And so on line 5, which was the total salary hourly wage reduction. In this example, there was no reduction, so it was 0. And we're going to add 1, 2, 3, and 4, and then subtract this box. So if this box is positive, that's bad on the forgiveness side. And so this comes out to $37,500. Now we're going to do the calculation for the FTE reduction, and this would be a percentage if you had reduced your employees. In this case, they didn't, and so the number is 1, which is 100%. So they had 100% of their employees. And now these are the 3 key boxes for everybody. Everything comes down to these 3 boxes, because whichever one is the lesser of these 3 is what your forgiveness amount is. And so the modified total is line 6 times line 7. So that's, we spent $37,500. We didn't reduce any employees, so we get to multiply it by 1. And so the modified total is 37,500. The PPP loan amount was $34,375. And then this is the payroll cost, making sure that you paid enough of it on payroll cost. And so you take your payroll cost and then you divide it by 0.75. And so that was line 1. Divide that by 0.75, and that comes out to $40,000. And your forgiveness amount is the smallest of any of these numbers. And the smallest number on there was the actual outstanding PPP loan. And so this example is a full forgiveness example of what somebody would do. They actually did more than they needed to in order to get their forgiveness amount. One more thing, I think I want to note it again, just because I don't want it to surprise anybody, is when I was talking about the idle advance, if this company would have gotten an advance, the rules on that advance were it would be $1,000 per person. And so they would have gotten $3,000. Even though this comes out to 34375, this forgiveness amount would be reduced by $3,000 once the lender submitted it for forgiveness. I just don't want that to creep up on anybody from a cash flow management standpoint. The only part of the application I did not go over is these are the representations and certifications on behalf of the borrower. And so you're going to go through here and certify everything, which basically says that everything you're putting in here is true. You didn't make anything up. We understand that there's civil or criminal repercussions for fraud charges, et cetera, et cetera, et cetera. So go through this, read through that. Those are certifications you have to make. And then, oh yeah, the only other thing that I really wanted to go over was the very end. It does have documents that you must submit with the PPP for the loan forgiveness application. And so all of that is on the second to last page, and what it's pertaining to is all of your payroll documentation. So read through this. This will help you understand what you need to be collecting as you go through this, or when you're getting ready for forgiveness. And then here's all your FTE documentation, your non-payroll expense documentation. And then here's a list of stuff that you need to keep, but you don't need to submit with the application. And just to give you an example, remember when I was talking about anybody who decided not to show up to work and you needed to get documentation of them refusing to come in, this is where you would put that stuff. You have to have it on hand, but it's not something that you submit with the application. And so I think I hit all of the major parts on this. I didn't want to read through everything in detail. My suggestion is to take the loan application, and no matter where you are in this process, go through it and project out what you think you're going to wind up doing over the next few weeks and see where you are. And this will help you plan for how to meet all the criteria and guidelines. Make sure you communicate with your CPA about everything, and document. And I think that's really it.
I'm gonna mute myself. All right, Justin, thank you so much. We have lots of Q&A. Tom, are you able to speak?
I am here.
Okay, is there anything you want to add before we open it up to Q&A and start asking the questions?
No, I think we can jump right into that. I thought Justin did a great job of giving an overview and hopefully we'll answer some of the questions, but we can dive into that and ready to start.
Okay, great. So we're going to start. I'm going to work backwards. This question is from Carlita Vassar. Is the time period by payroll period or time period worked? That's the first question. Is insurance, work comp, and liability included as forgivable expenses? Question 2, if there are new employees who were not included in the loan request, can they be included in the forgiveness request? And if the owner was not included in the payroll costs for the loan, can they be included? And are phones included as utilities? So I will ask those questions all singly, and then Tom, I'm going to let you answer and Justin can chime in. So is the time period by payroll period or time period worked?
Okay, so if we're talking about, I believe, the forgiveness period. So the forgiveness period would start on the day that the loan was dispersed. So the day that the business got the money, and then you got 8 weeks over that time period. So you're measuring by when the payroll is incurred. So it would be, and that's why the alternative coverage period is allowed, so that you can hopefully adjust your beginning period. So if you get the money in the middle of pay period, you have the option of starting your forgiveness period on your next payroll date. So you would hopefully be able to sync that up. So it's basically the payroll incurred. If you have payroll, if you aren't able to sync them up and there's payroll incurred after the end of the 8-week period, but paid on or before the next pay period, that can also be covered and included.
Okay. Is insurance, work comp, and liability included as forgivable expenses?
Workman's comp and liability insurance are not listed as forgivable expenses, so I would not include those. Insurance for health care is included, but not workman's comp or liability.
Thank you. If there are new employees who were not included in the loan request, can they be included in the forgiveness request?
Yes, so it is basically, so if, as Justin covered in his example, some people may come and go, but yes, you would list your new employees at the time that you are completing the application.
Great. If the owner was not included in the payroll costs for the loan, can they be included?
The short answer is yes. And on there's a separate schedule on the forgiveness, are not included in those worksheet tables, but the owner's salary would be includable.
And are phones included as utilities?
Yes, phones are one of the listed utilities.
Okay, thank you very much. All right, the next question. We have only one employee. She has been full-time through the covered period, but had a side project in January, February FTE period, and thus had only 36 hours total in January, February. Any issues with that?
Obviously, you would use the time worked, so you would use 36 rather than 40, but that's going to be within the safe harbor of the 75%, so I don't think that would be an issue. You also have the safe harbor period as of June 30th. If you, as Justin walked through that computation, if you run into an issue where you're falling into a chance where your loan would not be fully forgiven, you can still use the June 30th FTE count to get there as well.
Thank you very much, Tom. If you are a sole proprietor LLC with only one bank account, what paperwork do I submit? I don't have most of those things they were asking for.
Yeah, that's one of the areas where we're still going to need more guidance. It's a little bit fuzzy on what the sole proprietor will have to do to document that. So there is still some time before that's submitted, and I would work, as Justin suggests, I'd work with your bank, because your bank is going to, or your lender, it could be a credit union as well. They will collect the forgiveness information, and as I said, I think there'll be more guidance on what a sole proprietor will have to do to show that they did comply with using those dollars for their business.
Thank you, Tom. Is an EIDG, I'm assuming that's the Economic Injury Disaster Grant, the same as an EIDL. I got an EIDG, do I subtract that?
Yeah, in lingo terms, we basically call it an advance versus a grant. So as Justin mentioned, the computation is $1,000 per employee up to $10,000. So if you got that grant / advance, that would be the amount that is, you would not subtract it from your application, but SBA is going to reduce that in the amount they're going to send to your lender for the forgiveness amount.
Hey, for employees at time of application and forgiveness, is this FTE or actual employees?
You would use FTE. So if you have like a part-time person, as Justin uses as an example, if you can use a simplified method of part-time is using all 0.5s. If you have people who are not making 40 hours, but you would measure based upon FTEs.
Okay. Say I have asked my employees over and over on our employee Facebook page, but not given them an actual written offer to return. Is it too late now? I literally have employees refusing to come back because they are making more money on unemployment and a few are scared to return. Is this going to hurt me? Is there anything I can do?
I think as was mentioned, I think the best thing you do is document as best you can. So if you got anything on your social page that you can print out and show that you had a communication and they're saying they did not come back. I mean, obviously the best is that you give them some type of written offer and you got something back in writing. You're gonna have to document that. I don't know if it's all verbal. What I would do is I would document the best you can what your conversations have been and what was determined. But obviously the best is to have something back in writing from them, either email or social communication. But if you don't have anything in writing, you know, you could even maybe email them or message them and confirm that, hey, I just wanted to confirm that you declined. But obviously the more documentation you have, the better.
Okay, thank you. What if an employee missed work because they were sick, not with COVID, and their hours were reduced because of it?
I think sick pay is money that you paid them for sick pay would count toward the salary that you paid for them. So I think that you could include sick pay.
Okay, great. Is cash contribution based on net pay or gross pay?
It is based upon, we're talking I guess the computation of the PPP and the forgiveness is based on gross pay. So you would be able to take, the original guidance had backing out the withholding amount, but then clarification came out. So basically it's based upon the gross pay for the employee.
Okay.
So that would not include the employer's portion of FICA as an example. So that would not be included, but you would use the gross pay for the employee.
The gross pay. Okay, great. How do you determine, oh, we asked that. How do you determine payroll for a sole proprietor when salary is paid out as draws?
Yeah, so computing the PPP loan, you're using your Schedule C net profit. So it's your net profit as a sole proprietor. And we're not sure on how the forgiveness piece will be. I would assume it'd be a similar type of thing. And we're not sure what you're gonna have to document as far as showing that for forgiveness.
Okay, great. If an employee's annual salary is over 100,000 and we don't reduce their salary during the pay periods, do we just list their payroll amounts that were paid to them, or are we supposed to reduce it by any amount? PPP application stated that we can only include up to 75% of their salary.
Well, you can pay them as much as you want, but you're only going to qualify up to $100,000 is the maximum, and then you're going to multiply that out by the 8 weeks over a 52-week period, which comes out to roughly $15,000. So that's the amount that will be applicable toward potential forgiveness.
Okay, thank you. If employees receive a bonus for working during COVID-19, can that be included in wages paid?
Yes, hazard pay and bonuses can count toward your compensation for those employees and can be included in the forgiveness amount.
Okay, great. My question, let's see. We have a new employee who is also a share owner of the company that started on March 1st, 2020 to replace a former employee and share owner that is now partially retired and is no longer an employee. If we are limited to 852 of the new employer's compensation in 2019, you know what, this question time, I'm gonna ask you off because it's very detailed. I'm gonna ask you off the record and we will send the person that asked it the answer. Is like, and I think you answered this, but I'll ask it again. Is the FICA match or federal unemployment figured in anywhere?
No, that is not counted.
Okay. My business has been closed by St. Louis County mandate since 3/15, and there is still no indication of when we can open. My rent to date has already exceeded my PPP. Am I supposed to be paying rent and payroll when I am not able to operate at all? Is this the case? We will need to close the doors before we open. There is a lot of talk about changing the PPP requirements for the hospitality entertainment industries. Why did we not discuss any of that today? And I know that's a tough question to answer, but we don't have the answers to that. Tom, you want to add to that?
Yeah, I would just say, I mean, it's up to Congress to change the rules. At this point in time, we're implementing what the current rules are. And obviously, I don't have any inside information other than what you hear and see in the media, but I know there's matters being taken up in Congress right now to maybe make some changes. And if those are implemented and passed by Congress and passed into law, then those will be implemented and changed.
Thank you very much. Entering the cash compensation, you answered that one. Does it include local and state taxes?
Yes, so it's not federal, but local and state taxes can be counted toward the payroll costs.
What if we are a contractor with no employees?
All right, so if you're a contractor, then you're self-employed and you'd be eligible, but it's based upon what you report on your tax return on Schedule C as your net profit for your business. Okay.
If we issue an increased hourly wage and our compensation to employees for work during the pandemic, what would be considered an eligible, what would that be considered an eligible expense to use PPP money for?
Yes, you can use that. You can give them hazard pay or bonuses up to obviously the $100,000 maximum per employee.
Great. Our company is a small nonprofit and does not offer any benefits. In lieu of that, we offer medical reimbursement for eligible medical expenses. The max amount a person can request is based off the employee's FTE. If an employee submits a request for medical reimbursement during the cover period, would that be an eligible expense to use PPP money for?
I'm going to ask Justin to add his 2 cents on this as well. The definition, as I see, talks about your health care plan and your expenses for that for your employees. So obviously, health group medical insurance that you're paying for your employees clearly is included. I'm inclined to believe that if you have a written plan and your plan is to reimburse and basically self-insure your folks and you're doing medical reimbursement, you're doing that consistently as you have been in the past, and I'm inclined to think that could qualify. Justin, do you have any thoughts on that?
Yeah, I think the key for what you're saying is that it was already in place, because I know a lot of the other requirements was it in place before February 15th? And if you can show that that goes back, I think that you have a really good case for that. Yeah, that's really all I have on that one.
Okay, thank you. What if I actually increase my staff's pay across the board by $2 an hour to keep them happy, to keep them from going on unemployment like the rest of the staff? Will any increases be forgivable as well?
Yes, so you can increase the pay and bonuses, pay hazard pay. So yes, subject to the $100,000 limit per employee, but yes, you could increase your employees' pay and have that counted toward your forgivable salary expense.
Thank you. We are an early education intervention service that follows a school calendar. Our 8 weeks includes a period of over 2 weeks we aren't paying due to the schedule. This isn't a reduction in wages, just an anomaly of our work calendar and the loan period. Is there any provision for this?
Well, currently it is the 8-week period. So if your 2 weeks off falls into that, it's basically measured on what your salary costs that you pay and incur during that period. So if you have a 2-week gap and you're not paying anyone, you're not incurring payroll costs, the way the current rule is written is that obviously you wouldn't be able to count anything for the period where you're not paying salary.
And I think you answered this one, but I'm going to ask it again just for clarification. Do you subtract the federal tax paid out of your employee pay for the amount?
So basically, when you're figuring the amount of your loan and your forgiveness amount, you use the gross pay. So yes, so what you've deducted from the employee's paycheck for FICA and federal withholding and state withholding, et cetera, you're basically using the gross pay for your computation and for your forgiveness.
Thank you. Say you have a loan of $100,000 and verified for forgiveness of $90,000. Can the $10K simply be paid back to the bank with accrued interest and the loan closed?
Yes. So if you have a portion of the loan that's not forgiven, that remaining balance will have to be paid off within the two-year period. So all PPP loans have 6 months of deferral with no payments. So if, let's assume at the end of that 6-month period, you've determined that there's $10,000 that can't be forgiven, they could pay it all back at that point in time, or they could make payments. It's really up to the lender to work with the borrower and just have it repaid within the 24-month term of that loan.
So if they pay it back within the 6-month period, there would be no interest accrued?
There still would be interest accrued. So there is a deferral, so there's no payments due, but the interest amount is accruing at 1% on the amount. So
Okay.
you can give forgiveness for that interest amount. So if you have enough expenses, all the interest can be forgiven as well. But if you don't have have all the enough expenses to forgive, or in this case it's 10,000, you'd have to pay the 10,000 plus interest that was accrued on the funds while you had them at 1%.
Okay, great. Thank you. For employees who did not receive during any single pay period in 2019 wages or salary at an annualized rate of pay more than $100,000, I'm not sure I understand this question. I'm gonna skip this one and maybe we can just respond to this person offline. They'll have to ask their question. Yeah. So I think that is all of the questions that I have. I have somebody that has their hand raised. I am going to allow them to talk if they have a question. Dee, are you there?
Yes, I was asking questions regarding sole proprietors, and I think they have said that they don't really have the answers on sole proprietors yet. So,
Yeah, that usually follows. That usually comes out a little later, but Tom, do we have any idea when we'll get that direction?
No, I haven't had
Okay.
any timing issued on that yet. And as you mentioned, the sole proprietors were, the program started April 3rd, but the sole proprietors weren't able to start making loans until the 10th because there's additional, obviously, a little bit different scenario and different rules that apply. So I would expect that the sole proprietor guidance would be out shortly, because we're getting a lot of questions on that, rightly so. People need to want to understand how to do that. So hopefully soon.
okay,
Thank you.
great. Thank you.
All right, Michelle. Are you there? Oh, I guess I have to unmute you. There you go. Michelle.
Sorry about that.
No,
Yeah,
that's
so
okay.
I had a couple of questions I'd put out there. I guess they didn't come through. And one of them was on the benefits side of things. Can you include disability insurance and survivor plans that you pay for the employees?
My recommendation is only list health insurance. So my recommendation is not to include anything that's not listed. So like disability and others, I'm suggesting not to be included. I don't know,
Okay.
Justin, come across anything on that? Do you have any comment or thoughts?
I've been going off what comes straight out of the SBA. So that is everything I go off of. And if it doesn't expressly state it, I don't say it.
Okay.
That's kind of what that's what my recommendation is as well, is use, if it's not listed, then I'm recommending not to include it.
Okay. Another thing, and I may have just missed this, but we have employees and we also have a few independent contractors. And the independent contractor amount was included when we applied for the loan, but I didn't see where I included those amounts to be forgiven.
Yeah, basically the amounts paid to independent contractors were not eligible for inclusion in the loan. So you'll have to work with your lender. That portion will not be forgivable. So you'll have to work with your lender on how to repay that.
Okay. And then, so we pay semi-monthly on the 1st and the 15th of the month. Am I going to need to break out payrolls here at the end to make sure I'm only hitting 8 weeks, or can I hit basically 2 months worth of payroll towards that?
Yeah, you're gonna have to use the 8-week period at this point in time. There may be some more. I've seen the semi-monthly come out as a question, and I'm thinking when the guidance was issued, maybe they didn't. They talked about bi-weekly, but it didn't address the semi-monthly. So I'm hoping that maybe it'll come out with some clarification to make that a little easier. But as of right now, you'll have to break the way I see it and the way it's written. You'll have to break that last pay period up and only include the days that are included in your 8 weeks.
Okay. And then I didn't have this one on here, but another thing I just thought of is I had one of our employees that went on maternity leave in late January, but then we were paying them a portion of their pay for a while, but then they were not being paid during the forgiveness period. So we had an independent contractor that was covering that. So is that one of those things where I just kind of need to get a thing in writing from her that she was out on maternity, and then that would be one of our FTE exceptions?
I don't remember Justin, do you remember on is family medical leave, maternity leave, one of the exemptions you would think it would be.
I would think if that they had a job available and they were not working during that job time or that period, I think that that would be like, let's forget about FMLA. If this was just something else, I think it would still count under that exemption rule.
Okay.
Thank you. Okay, we're going to move on to Kara.
Hi, I've asked this question kind of sort of twice now. I just need some clarification with a $100,000 salary. Are you saying that 100,000 is for what we would use the money to pay, like it cannot exceed 100,000 per employee for the 8-week period, or are you taking in their 100,000 salary for an entire year?
Yes, the 100,000 annualized, so it works out to 15,385 would be the maximum that you can include in the payroll cost for the computation for forgiveness.
Per individual that exceeds 100,000 annually.
That is correct. Yes, it'll be 15,385 max per each of those people.
So no matter what they were paid in that 8-week period, I cannot list more than that amount in that section.
That is correct.
Okay, and then what if someone was sick, not with COVID, but missed work, and we don't offer sick pay until they've been with the company for a year? So technically it might have reduced their hours in 1 or 2 weeks. Do I need to change, like, because I know it was saying if they're not 40 hours, then it would change to 0.5 instead of 1 on the FTE?
Yeah, I think that's right. Justin, do you know for sure how you'd recommend on that one?
Yeah, I think there are two things that you're dealing with in that situation. Is one is you're not paying them, and the other one is that they're not. They wouldn't go into the FTE calculation. And so where I think it becomes the biggest issue isn't in the FTE calculation, because I think that's something that you can get in writing, demonstrating that this was not you just being mean and shutting everything down, et cetera.
Right.
But what happens is when you don't pay them, I think the assumption is that money was not used. And so that is going to go against the forgiveness amount, and that money still should be in the bank account somewhere. And I think in the example earlier where it was somebody had $10,000 left over, can you pay that off? That's where I think it winds up becoming the issue, is that the compensation wasn't paid, not that the FTE was reduced. Are you following with that, Tom? Do you think that's a good way of thinking about it?
Yeah, that was my thought as well.
What if that employee was also let go because of their excessive absenteeism? I'm not even gonna say the word right.
I think you've got
Absenteeism, that's a good word.
Yeah, then you've got the for cause, and I think you document that, and I think you're okay then.
And then if we rehired someone else to replace their position.
Then you can use a new FTE count, and the new payroll cost would be included in the forgiveness calculation.
Okay. I just wanted to make sure I was understanding that correctly then. So they kind of wash each other out then, correct?
Correct. Yep, 100%. And that's what I think the hardest thing. Don't think of it as a person. Think of it as a position or somebody that is like a role in the company. And so if one role goes away and you fill it in with another role, it's still the role. It's just not the person. And so try and think of it that way. It might be a little bit easier.
Okay. And what if we have hired 4 new people since we filled out the PPP application? Will that make any difference whatsoever?
Well, you can't go back and increase the loan. There is one exception.
No. I was just saying when it asks what our total number of full-time employees are for the pay period that we're using, if it's higher than what was on their application, that's not going to affect it as long as it's not lower.
No. In fact, and you got all the way to June 30th, and if that is a better option for you, you can use the head count as of June 30th and use that higher amount, use that higher number.
Okay. Thank you.
All right, thank you. I am going to ask a question, and Joe, you will be next, so don't put your hand down. I heard there was a PPP Flexibility Act passed today. Do you have any details on that, Tom?
I have not heard that yet. I think the House was going to vote today, so that's probably what they're referring to.
Okay.
But obviously, going back to social science class in grade 4, we have to wait till the Senate passes it, and the president has to sign it before it becomes law.
Gotcha. All right. We have 2 owners and subcontractors. Do the subcontractors count for forgiveness if they were also in the application?
If they're subcontractors being paid under 1099s, they would not count toward the employee count for that business.
Okay, great. I believe I entered 3 employees versus FTEs on the application. How do I address this on the loan forgiveness? We have 1 FT and 2 2 part-time, but 3 actual people?
So on the loan application, whatever you put in there, it was fine. What we're really governed by is what the actual number was. So if you made a mistake on that, that's what the FTE count didn't factor into the calculation of the loan, was only total payroll cost. But on the forgiveness side, you've got the FTE measurement, and you'll have to show what the actual FTE count was on those different options last year or the first 2 months of this year, and our June 30th versus what your actual count was.
They muted me, I forgot. They muted
Okay,
me.
great. Do I wait until 8 weeks is over to fill out the form?
The rule says you have to wait at least 7 weeks. So you can, after 7 weeks, you can go ahead. If you got enough expenses, you could go ahead and submit that. What I would suggest is I wouldn't rush to do that at this point in time, because as you just mentioned, if the House took action today, the rules might be changing. So kind of, I think Justin had good advice. It's kind of look at, and obviously look at what's in the best benefit of your business, fill that out. If you're 100% fully forgiven and you're there, then there's no reason to hold off. But if you're not at 100%, you may want to wait and look and see what the new guidance is, and obviously take in the full benefit of all the expenses you have during that 8 weeks. So short answer is you don't have to wait 8 weeks, but you do have to wait 7.
Gotcha. If there are new employees who were not included in the loan request, can they be included in the forgiveness request?
Yes, they can.
Okay. We have employees as well as a few independent contractors. The independent, yeah, I think you answered that one. Okay, I'm going to open it up to Joe now. Joe, you are able to talk. Oh, maybe not. Hold on, Joe. Okay, now you should be able to talk.
Can you hear me?
I can.
Okay. I own an LLC construction company, and I'm the only employee. I have been instructed by my CPA that when I fill this form out, actually the loan amount, I would fill it out as a sole proprietor. But when I do my taxes annually, I contribute to a SEP account. And can that SEP amount be included in the forgiveness amount? Because it was my understanding, if you don't have any quote unquote employees other than yourself, then the retirement benefits would not be included for you. And then secondly, specifically, could I deduct the amount that I have not yet paid for 2019 in that SEP account, which is not due until the 15th of next month? And then I forgot what the other question I was going to ask. I forget. I'm sorry.
I'll go ahead and answer those questions. Your accountant has told you right. For basically for the LLC flows through, so it really files by how you pay your taxes and how it flows through. So in your case, it sounds like it's a Schedule C since you're a sole proprietor.
Yes.
And so that is correct. And then the rule does specifically state that retirement payments for self-employed individuals are not eligible for forgiveness. And
okay.
the reasoning of that the thought was that was funded out of the gross profit amount. So your accountant has told you right that the SEP contributions would not be forgivable expenses.
Very good. By the way, thank everyone in this. This has been very, very helpful. Thank you so much for putting this together.
Thank you very much. All right, Diane.
Hi.
Hi, Diane.
Hello. Thank you very much. I've got a question about this classification of owner-employee that goes on that line 9 now. We are a professional corporation, so we are all W-2 employees, but some of us are also share owners. How does that come into play? I don't like classifying us as owner employees because of the cap of the $852 of your 2019 salary. Can you please explain this?
Yeah, I'll take a shot at that, and Justin, see if you would agree with this. But my understanding then is the owner employee is really for the sole proprietor. So in the case where you've got a corporation, really, you're applying for basically as employee, even though you're also shareholders, you're basically included in as employees. And if you're basically obviously subject to the $100,000, whether you're owner / employee, but I think the terminology owner employee is geared more toward a sole proprietor.
Fantastic, because that's exactly what I needed it to be.
Yeah, would you
So
agree with that, Justin? Yeah.
So we will list everyone in the tables 1 and tables 2, and we will just not have anyone as an owner employee.
And I think the reason for that is you're not getting any direct payments from the, like as a Schedule C or anything like that. It's coming through some type of dividend, which is
Correct. Well, not even a dividend. Ours is solely salary. It's all W-2 wages. And that's how I read the intent of various things, that it's only for Schedule C, but nothing actually stated that anywhere. So I got a little concerned because we hired a new employee that is also a share owner that had no money at all from 2019. So if we had that cap limitation, I wasn't sure what to do with that. So this is very good news. Thank you very much.
Yeah, you're flowing through as W-2 employees, so it'd be basically salary, and as Justin said, if you were employee owner, it'd be on a Schedule C.
Thank you. This question was asked a couple of times. What can be included in transportation under utility expense in the utility section?
That's a very good question, and we're still waiting for clarification because all it says is transportation. What I'm thinking it is it'd be basically your car expense that you would include on like your Schedule C or whatever you're including in your business as deductible transportation, car expense, and traveling. But that at this point is my what I think it is. I think there'll be further guidance to define what that is. But that's kind of what I'm advising people to kind of think at and work toward, is what portion of transportation would be forgivable.
All right, thank you, Tom. I have one more question here, and then, all right, Joe, you're back.
Sorry, I remembered my question. I remembered my other question.
That's fine.
Is there a required date that you begin disbursement of the loan as a LLC? So let's just say I got the money the 1st of May. Am I required to start dispersing that at any particular time, or is it just so that I disperse it all over the 8 weeks?
Yeah, it's cumulative over the 8 weeks. So you have basically the 8 weeks at this point. Obviously, I don't know what the House's proposal was, and there was a conversation that they were going to extend that beyond the 8 weeks. But what the current law is, it's what you expend over that 8-week period, and it also includes anything that you incur that you would pay after the 8 weeks, but it have to be like for payroll, for example. You can pay our utility bills, maybe a better example. So if you incur a utility bill and half of the bill you pay after the 8 weeks related to the period within the 8 weeks, you can include half of that following utility bill as well.
Very good. Thank you.
Great. A few more questions and then we'll wrap it up. Please clarify, our bookkeeper is a 1099 employee, so her wages were included in the calculation but cannot be forgiven. Is that correct?
That is correct. Yeah, if you're not paying a W-2, not paying self-employment tax on that individual, they're not considered an employee for the PPP.
Okay. We have one employee. She has been full-time. No, I think I answered. No, I didn't. We have one employee. She has been full-time through the covered period, but no, I did answer that one. So yeah, I think I got it. I think we have answered all of the questions. I thank you, Tom. Oh, we have a few hands raised. Okay, we're going to get these 2 more questions, then we're going to wrap it up. And let's see. I think I unmuted. Is that you, Diane?
Dina, yeah.
Dina, okay.
I have one more question. I heard the LC sole proprietor question. So amount that is going to be forgiven, do we have to, if we're taking things out in a, and not in a W-2 type of thing, we pay our payroll out during the year as a draw, and then at the end of the year, of course, we pay taxes. So in the next 8-week period, do I simply take that amount of the loan and divide it by 8 and pay that out in cash? because I'm not paying any taxes on that till the end of the year. So I'm kind of confused. Is that still the gray area that you were speaking of?
Yeah, that is still the gray area, and I'm hoping that there'll be more guidance to give more clarity, because a lot of self-employed individuals are wondering, what do I have to do? Do I have to write myself a check, or how am I going to document that? Because you don't have the 941s and the other unemployment type things that you're filing with the state that the employees will. So yeah, there'll be more guidance on that. And my recommendation would be, I would wait and see, because it sounds like if the current legislation passes, we may even have longer than 8 weeks to track it. But yeah, I would kind of wait and see what the guidance is, and stay tuned to that, because there is no rush at this point in time. There is no deadline as far as at this point when you have to submit. I'm guessing that the guidance that will come out and say that the borrowers have to submit their forgiveness application within X period of time, but that's currently not stated. And then once you submit it to the lender, they have 60 days to review it. And most of the lenders that I work with are going to be waiting and holding that application anyway until they see what the guidance is. So I would kind of wait and see what comes out on that. But yeah, for self-employed individuals, we need more clearness on what you actually have to do to document your forgiveness amount.
Okay, great. Okay, thank you.
Thank you very much. Okay, Karen.
That was weird.
I have a question. Hello. Thank you, everyone. This is so much helpful information.
I mean, it's pretty
That's-
much what you were thinking anyway.
That's why we haven't done it.
Oh, I'm sorry. I need to mute people.
Oh, I'm so sorry.
That's okay. Are you there? I'm sorry.
Okay, I'm here.
Okay.
Yes. Thank you, everyone, for the helpful information that you're sharing with us. And I'm with someone else on the questions. If we can get a copy of this recording, that would be grateful. But if we had to close our business and work from home, can we use some of the home expenses as part of the PPP?
8 weeks. And then this guy says, you got to wait until you find out what.
Okay. Somebody else is not muted. Tom, can you answer that question?
Yeah, basically, as I understand, the home expenses would not be included. The amount that you would pay for, like if you have to work from home, but you have to continue to pay mortgage or rent, you could deduct the mortgage interest, not the principal, but any mortgage interest you had on, if you own your building and you're paying a mortgage payment, you can deduct the mortgage interest for those 8 week period. And you can also deduct the rent paid for a business. But so that would kind of offset the fact that you have to if you have to work from home. But if you work out your home normally, then that would be included through your sole proprietor and Schedule C. But in general, if you're working home from this case, I would not include the home expenses as part of the forgiveness amount.
Okay, thank you.
All right. Well, thank you, everybody. I really thank you for your patience. First off, we're sorry for the technical difficulties we had at the beginning, but we really got some good information, and want to say an extra special thanks to Justin and Tom Daiber from the SBA, Justin from the SBDC, St. Charles County EDC. We will actually be getting the recording out to you. It started about 5 minutes late, so we forgive you for that, but we will be sending you the recording with the Q&A, and I will also be sending you the presentation. Somebody else asked for contact information for the people on the call today. We will also provide that information as well. So we thank you very much for being with us today, and we will keep you posted when we get further updates. We will have additional webinars to provide you with that additional information. Again, we thank everybody. Have a great weekend, and everybody stay safe.